What do you make of the fact that the moves are very orderly this morning to something that feels like a step towards normalization?
I think in part, if you look at the way people trade the yen, there are two groups of people. There are people who go long the yen because we've gone from 100 to 150, and hell's bells, in real terms, it hasn't been this cheap since the 1970s, and most people can't remember that. So,
right.
And then there's another group who every time volatility picks up, they sell it because nothing's going to happen, because the yield differential has driven everything, and the Bank of Japan's not tightening monetary policy. And in a sense, today didn't dissuade either group, so nobody's done anything. So we haven't had a spike in vol because in the end, the yield differential hasn't moved very much because 10-year note yields got up to 4%. So they both moved pretty much together for all intents and purposes. They've announced that they feel that they now have the right to let their yield curve control adjust so that they go outside of their band when they want. Well, what's that? That's a nudge. That's not a shift, right? It's a so it's not even a tweak in my kind of sense of the world. But so having done that, you kind of look and say, well, I go out of it thinking, you've protected the upside in dollar yen. The yen can't fall much after this, but you haven't done the things that I need to do to get happy, to get dollar yen down towards 130 on its way. And so, I kind of look and say, well, the danger is it's going to be slow. The positive a yen bull can take is, I think it's very clear that they don't want dollar yen moving higher than this, back up to 145, yes. 150. So you can feel comfortable, but that's kind of as good as it gets.